everybody? This is David with McConnell Real Estate Partners here. I've got Bill Payne with First Home Mortgage here. Today, we're going to kind of go over some questions that I've got from you guys, some questions for a lender, and just kind of see what kind of is going on with the lending and real estate, and just kind of discuss all that. So, Bill, I'll let you do a quick introduction.
Yeah, hey, thanks for having me, David. My name is Bill Payne. I work with First Home Mortgage. Company's been around for 32, 33 years, and my business partner and I opened a branch here in Mount Pleasant, South Carolina in 2010, and I've been in the world of lending since 2005. So I've seen a lot of ups and downs, which is currently what we're going through in our market.
Yeah. So if you had to kind of, I guess, maybe summarize it, you said you've obviously been in this for a while. What would be kind of, in summary, one thing that really hits home for you as kind of like the driving force of your business and what's kind of kept you in it?
Yeah, it's there's always going to be ups and downs in any industry. And so first, having a great company and good people to work with that are able and nimble to adjust with the market as it adjusts. And that's not just the company First Home itself, but also great realtors that I work with, you included, David, and great clients.
Thank you.
And all of us collectively working together for the same goal and same objective, and that's to bring home ownership for our clients and fulfill their dreams. That's if we keep that in the forefront, it always leads to success and makes it very rewarding.
Gotcha. Well, cool. So obviously things like you said, things are kind of at a crazy point right now. What would you say is like a common type of mortgage that we're seeing today? I know there's lots of types. Especially in Charleston specifically, I know geographically they kind of change per area. So like what are we seeing in Charleston? And then kind of what in the other areas are you seeing a lot of these days?
Absolutely. So in Charleston, especially the last 2 years, because of what price points have done, jumbo loans, those that exceed Fannie Mae's and Freddie Mac's loan limits, have really come into play.
Okay.
I would say that accounts for 40% of the business that we do and 40% of the mortgages that are secured in this area. The remainder are primarily conventional loans, some VA, and then there's always other options like FHA or USDA, but they just really aren't a good fit due to their loan limits for those two loans here in the low country.
Gotcha.
One big announcement today was the Federal Housing Financing Agency adjusted the new conventional Fannie Mae, Freddie Mac loan limits from $647,200 to $726,200. So that's a $79,000 jump.
Yeah.
From 1 year to the next, which is going to be hugely helpful and important for especially first-time home buyers in this area.
Mm-hmm.
They'll be able to get away with still putting only 3% down.
Okay.
Second-time home buyers, third-time home buyers can get away with putting 5% down, as long as that loan doesn't exceed that amount. And so that's going to help prop up or sustain these price points here and lead to more home ownership.
Interesting. Very interesting. So when you're looking at, like you said, 3 to 5%, is that the minimum for those things? Is like, if you're looking to put, a down payment down on a home, what's kind of like, I guess maybe what's standard for Charleston, and then what's also doable, like what's like an acceptable amount, like the minimum?
Yeah, no. So as long as the loan limit or the loan amount doesn't exceed those limits, a first-time home buyer can get away with just putting 3% down. Okay. If you're not a first-time home buyer, which means you haven't owned a home in the last 3 years, if you are not a first-time home buyer, you got to put at least 5% down.
Got it. Okay.
So that's for a conventional loan. A jumbo loan, for instance, requires you can get away with just putting 10% down, but everything in lending is risk-based. Okay. The interest rate is going to be abnormally high in that scenario. For a jumbo loan, you're really looking for 20% down. But the increase in the loan limits and what home values have done here is I feel like things are a little more sustainable, whereas those price points were increasing so quickly over the course of the last 2 years. It made things much more complicated from a lending standpoint to find the loans that were needed to help people purchase these homes.
Heard. Okay. So say you're getting ready to you're getting everything together, looking at buying a house. When you're coming up with the money for the down payment, are there any payment assistance programs to kind of help with either down payment or that kind of with the purchase of that? Um, and then kind of a second part of that question is are there ways that you can create that money without necessarily having yourself, as far as like a gift? Like, can you have a parent help you with the down payment, aunt, uncle, that kind of thing? Because I know in the past it's been, it's strictly has to be majority. Like, I mean, that's kind of your thing. They check back to make sure you've had the money and it's not coming from somewhere else. So is that, what's that going to look like?
Yeah. Okay. So to speak to your first part of your question, every county or state has bond programs where they provide down payment assistance. That's going to vary from every county and state. Those are always an option, but the terms usually aren't as attractive as if you went with a traditional Fannie Mae, Freddie Mac conventional loan, and which they allow you to receive a gift of funds for the cash down, whether that's 3%, 5%, 10%. And by gift of funds, that means it's coming from eligible providers such as family members, aunt, uncle. There are instances where an employer can provide it.
Okay.
And those funds don't have to be deposited in a buyer's checking account or bank account prior to purchasing. Those funds can be wired directly to the closing attorney or title company the day of closing. So it makes the paperwork a lot easier handling it that way, and it's perfectly fine.
Okay, cool. So we've got the down payment down. When you're looking at the next step, which is obviously the interest rates, what are kind of, obviously things are, and everybody's big question is, what are interest rates looking like? Where are they going? First off, to start with, what are we seeing right now? We know where they've kind of peaked, and where are we at in relevance to like the craziness recently, I guess.
Yeah, they're still very volatile day to day. You can see a swing on an 1/8 or 1/4% in a span of an 8-hour business day, and that really is not abnormal. And that typically hasn't ever been the case. So I say this with 3 weeks ago, I believe they peaked, and we since seen them trend downward. So for instance, for a conventional loan, you're looking in the mid to high sixes. Okay. And I get that range with whether or not you're paying points. Mm-hmm. Whereas a jumbo loan, that's kind of like the lower to mid sixes.
Okay.
That could change based upon the Fed's actions with their next meeting, which is coming up in about 2 weeks.
Okay.
And the Fed, to be clear, the Fed doesn't set mortgage interest rates, but their actions, their words, definitely have an indirect impact on long-term rates. So if the Fed is still overly concerned about inflation, which from the rhetoric they still are, they could lead to interest rates trickling back up maybe in the first quarter of next year. Mm-hmm. Or if Wall Street has their way, if their bet is right, the Federal Reserve will hike the Fed funds rate one more time. That'll come in December, and the market already expects that. Mm-hmm. And then they're going to pull their foot off the gas. And then from there, we would expect to see a slow but downward trend on long-term rates as the economy kind of settles into whatever recovery mode we're going to be in. And I think, quarter over quarter, we'll see, my gut tells me, we'll see long-term interest rates slowly inch down. It'll be interesting to see where they're lying when the spring market hits, in April or May. Yeah. And I feel like we've all now come to understand that interest rates are in a higher place than they were a year ago. And home buyers are accepting of that. So anything in the sixes, anything in the fives would be fantastic, I think, for the housing market, whether we're talking about here or anywhere in the U.S.
Yeah. Okay. Good thing to remember too is from the agent side is this comes up a lot, and I think Dave Ramsey's noted for this, so I want to quote him. But date the rate, marry the house, and I think that's very important in today's market. Kind of with what you're saying, with not 100% sure where it's going to go, but we'd like to assume that it has peaked, and we'll see something kind of declining or trending downwards in the spring. But the best time to buy is always now. If you hate to see a home that you fall in love with, and and two different things. One, not be, and we'll talk about this in a second, but not get a pre-approval, and you want to make an offer on it, but then you find out, oh, I can't afford it. So that would one suck. But then you'd also see, with the interest rates changing in the spring, buy the house now, the house that you love, and then refinance in the spring when it's at a more comfortable level for you. And that's just going to be a lot, that's how you get, I guess, the best of both worlds. Don't let the interest rate keep you from purchasing something now. That is, the gist.
No, that is sound advice. And as long as the home buyer is comfortable paying the current mortgage, most home buyers are going with a 30-year fix. So it's never going to get any higher.
Gotcha. Yeah.
The likelihood of interest rates falling over the course, whether it's 6 months from now or 2 years from now, relatively high. So at that point, you can refinance. Now you're paying even less per month for that house that you wanted.
Yeah. Absolutely. So we got we figured out the down payment. We kind of have an idea of interest rates. When we're looking at start to finish, day of, hey, I'm making an offer today, till closing date, what right now are kind of the time frame that you see, or what are you guys what's kind of like your business model of like, you're going to aim for this, and kind of what are we looking at with time frame?
Yeah, that answer will vary from lender to lender. Where our business model is set up so that if you want to close in 20 or 21 days, that's perfectly fine. That is fast and requires everybody involved, insurance agents, appraisers, closing attorneys, to move at a certain pace. But it also allows one buyer offer to be stronger than the others. Now, I'll say for a first-time home buyer, I typically suggest at least 30 calendar days, because everything's new for a first-time home buyer. You're guiding them through the process for the first time. And at least I'll speak to in our area, generally speaking, sellers are looking for a buyer to close within 30 days under normal circumstances.
Okay, cool. So when it comes to, I guess, that we kind of have the basic info of that. When we're looking for a lender, when it comes to you, what would you say would be kind of like the thing that separates your business from others, especially down here in Charleston?
Yeah, our business model is such as we're not a bank. We don't hold deposits. We're not dealing with auto loans. So we're here to do one specific thing. That's residential lending. And it allows us to create our business model, our operations model, so that we can be nimble, fast, and most importantly, always be available to communicate or answer questions to anybody involved in the transaction, whether that's the buyer or realtor, listing agent, buyer's agent. And it allows us to move at a very good pace and to ensure everything is falling in place, because securing a mortgage is, if you want to think about it, the easiest way to explain is it's like operating an assembly line, and you can't finish the step in front of you until you finish the step that you're working on right then and there.
Yeah.
And so it takes a lot of third parties to secure a mortgage. So you got to make sure everybody's moving at the same pace and doing what they need to in a timely fashion. And at least for the way First Home and we work is, we are happy to run point and to make sure everybody's moving at the right pace, and kindly interject if somebody is moving slowly so that nobody falls behind. Because in the end of the day, customer service means everything. We all want the same thing, and we want the customer to have a great experience.
Cool. Yeah, that's what's about. And that's what I would say is something I got to shout out Jen, is just something that they do so big, is just, that's the focus of their business. They've sacrificed other things just to no matter what, keep that client experience at the top level. And I think that's they've done a great job of building a business around that. So I had to shout out Jen for that one. So just some questions as far as for agents, just to kind of give agents some info to take away from this as well. As far as creating a smooth closing for your clients, what are things that we as agents can do to kind of prep our clients for a smooth closing, to even start to finish, as we're getting ready to look, is it making sure we have pre-approvals in line? Is it stuff like what are things that we can do to just help our clients have the best possible closing experience?
Yeah, I think pre-approvals are obviously important, so that when you make an offer, they know that the seller knows that this is legitimate. They will qualify for the mortgage needed to secure the property. It's also important because that requires that the lender has talked through specific numbers, what closing costs are, what the mortgage payment will be, to ensure that the buyer not only qualifies for it, but this is within their budget, their price point.
Mm-hmm.
And then that creates open lines of communication between the client, you, the realtor, and me, the lender, so that we're all working towards the same goal, acting in our client's best interest, and making sure y'all are out there looking at homes in the right price point. Because the last thing you want to do is have somebody looking at a home, they fall in love with it, but yet then the payment's too much.
Yeah.
So setting expectations and having open lines of communication is quite easy. You just have to be willing to put forth the effort. And that, in my opinion, is the key to a successful transaction.
That's good. That's good. Again, another agent question. So obviously we're doing this, did the podcast. We've done all sorts of good events like that. When it comes to, creating a community, especially moving into a new area, for an agent, or whether or not you've been there and you're just creating a new business, establishing that, are you a fan of those events that we've done? Like as far as using that to kind of create a good brand around yourself and just kind of create that, what's the word I'm looking for? Kind of just that approval, or not approval, but just, anyways, those events, like,
yeah.
What events have you done that have worked, that you've liked? I know we did the happy hour. We did a first time home buying seminar, stuff like that. Do you suggest that to new agents looking to try to start build their brand?
Yeah, I think like with anybody that's in sales, and technically at the end of the day, that's what we are in. You have to be honest. You have to do what you're comfortable with, something that's organic. And so getting out in front of the community, however you want to do it, through fundraising, through throwing events, whatever it may be. I think that's the most sincere and the best way to do it, because you're not only doing it because, hey, yes, this is your line of work, this is your industry, this is how you get to see people, but it's something that matters to you. So I think, David, you've done a great job of kind of following that lead. And then I appreciate you allowing me as a lender to be part of it, because again, all of us working together towards the common goal is really what the key to success.
No, it's good. I think that, and in that sense, that's kind of one thing that I've learned in business is, you may not always have the answer for everything, but if you know how to find it, or the people, I think it's just about building a solid base of people that and can trust, that can kind of help you with that, because that's going to go a long way. It's one thing if a client asks you, or asks you a question and you try and come up with some answer for it. It's you don't know. And so having a good base of people, like, if it's a lender questions, I can say, hey, I don't know the answer to this. I'm going to send you over to Bill and talk with him. Hey, we have an investing question. Okay. I don't know the answer to that, but Josh is really good with investing. I can send you over to that. So I think another thing for agents is just finding a good group of people that you can trust, that are willing to teach you, that are willing to help you grow. Because obviously it's in a mutual interest of you. If I grow, it helps your business, it helps Josh and Jen's business. So it kind of, just finding that group of people for new agents when you're starting out is, something I'd say is very important.
It's no one person has all the answers. So knowing when you don't and who you can reach out to them for those answers is another key to success. Yeah. To your point, you're exactly right.
Cool. Well, wrap up a couple of fun questions. I had some questions from the audience, and I know we've kind of discussed these before, but Anthony asked, so he was up in North Georgia is kind of where he's from. He heard that you need a pre-approval to view houses. He was curious if that's still true. From our end, I would say it's not necessarily required, but I guess it just depends on the situation. If you're looking kind of like, those standard, I don't want to say normal houses, but just like normal price range houses, they're not technically required. It definitely helps make your offer stronger. But in certain instances, and I was talking with Josh and Jen with, higher luxury listings, it takes a lot for a family. If you're like, hey, we have someone that wants to come see your house, for them to gather up the kids, gather up, the pets, clean everything, keep it nice, and get out of the house so that you can come see it. That's the kind of instance where it's like, we may require pre-approval because, we don't want, this is a nice house. We don't want just anybody just wanting to take a tour of it. So in that case may require it. But you wouldn't necessarily say that it's required, would you?
I guess there's no legal standard that says, hey, absolutely have to have it. But you're right. You don't want your clients that are selling the house to be cleaning up, getting out of the house, just so that somebody can casually just take a look.
Yeah.
Because they would like to, because they have a Saturday open and free. So yeah, to that degree, a pre-qual or pre-approval, I think definitely as a listing agent, seeing it's going to garner more seriousness in as far as what your expectations are for the potential buyers. Also, as part of the pre-qual and pre-approval process, that means that we've had the lenders had conversations with the buyers to make sure this is the right price point to be looking at. So it also helps you as a buyer's agent to make sure you're not leading them into homes that they ultimately won't or could not buy.
That's very true. Another question, and we kind of talked about this, but just kind of touch base on it again. I think it's a good point. Was Donovan asked, when do you think interest rates will come back down? And I think obviously, there's no way of us having an answer for that. Obviously, you kind of spoke earlier about what things look like from like a economy standpoint. But again, just to hit back on that point, I think it's important to just remember to date the rate, marry the house. And I think if you're coming from a point where you're thinking about buying or selling your house and you're just like, well, I'm going to wait till interest rates come down. It's like, I understand the thinking behind that. But that doesn't necessarily always make the most sense. Because especially if you find a house that you love, you fall in love with, and then you just say, I'm going to hold off till interest rates come down. You're going to lose that house, and you may not find something similar to it. Just when you could have just bought it and refinanced as soon as a couple months later. So I think it's a good question, but it's unfortunately a question we don't know the answer to, but we do have a way to kind of combat that in a safe bet to, if you're looking at it, just a safe way to kind of go about that.
To that point, I would say that we've never seen interest rates spike this quickly, ever. Long-term interest rates, and it's happened in a span of about 10 months. And what that is telling me is that the standard economic cycle has now been condensed. So what used to take a year or 2 years now takes about half that time. So I do believe that when or as interest rates start to trend down, it'll be a little faster than what they have traditionally in the past. It's not going to be overnight. Yeah. So it's going to be quarter after quarter. There will be some ups and some downs, but I think it will become a little more normalized. And that's going to help lead us into a nice, I don't know if it'll be considered strong, but a nice spring market, because I think home values will also be a little more normalized by that point in time. So I think though this what we're going through is a bit awkward. In the end, I think it's going to be better for all of us long term.
Agreed. Last question. You've obviously been in Charleston for quite some time. I think when was it you moved down here?
2004.
2004. Okay, so you've seen Charleston go through quite some change since then.
Yeah.
What is one of the things that maybe originally made you move to Charleston, or what are some of the things that you love about Charleston? I like to speak on this for people who are considering moving to Charleston, or other agents, if they have someone moving to Charleston and want to know about it, that gives them information that these are some great things about Charleston. So what are your key points about Charleston?
Well, when I moved here, I didn't have children, so I came here primarily just for the fun, just going on King Street or East Bay and just going to all the restaurants, which now there's even a whole nother load of them there. And that's unbelievable. Really kind of, because Charleston itself is not large geographically speaking, but has so much culture to offer.
Agreed.
Also love the beaches and the sun. And now that having children, that's even a bigger part of our life, going out fishing, going to the beach. And in all of that, I think it kind of speaks to, we have all these different areas: Isle of Palm, Sullivan's, Mount Pleasant, West Ashley, James Island, Folly Beach. They all have their unique feel, their own sense of community, but even as this huge expansion has occurred, they've all remained the same at their core. And so it's a beautiful kind of thing that we have collectively that makes up the Low Country. And that I don't know any other places, at least in the Southeast, that offers something unique. Like that.
Yeah, it's Molly and I say that all the time. It's so funny because we'll be like at the beach or something with some of our friends that are born and raised here, and we like look back at where we're from in Ohio, and we would go hang out at Walmart on the weekends because that was the only thing, that was the big thing to do. It's like, let's just go walk around Walmart and play with bouncy balls or something. But now it's like, you guys on Friday night just said, hey, you want to run down to the beach and just hang out. And we're just like, we're just so, jealous of just like you grew up here. So that's definitely when we would just look at our future and our kids, and this is definitely where we want to raise them just so they have that experience.
Yeah. I mean, you can wait for low tide to hit, go out and try to look for shark's teeth. I mean, just things that are just so unique to the area.
Absolutely. It definitely is. Another thing that we say is it's the biggest small town. It's big enough. Like you were saying, there's all these different areas with all their different cultures, but yet you'll still be, in one of them, and you'll go to somewhere else and you'll see somebody that you recognize. And it's just, it has that, it's Charleston still keeps that community regardless of how big it is. It kind of is encapsulated under, we're all Charlestonians, whether you're from here or not. And I feel like there's definitely so many transplants here now that it's kind of like, we're all kind of just one big community, which is such an awesome thing to be a part of in Charleston.
I agree. Yeah.
Cool, man. Well, hey, thanks for taking some time. I know we had some technical difficulties, but I do appreciate you hopping on here and getting to chat a little bit. I'm sure there's a lot of good information that people are going to appreciate. So it means a lot, Bill. And it was great talking to you today.
No, hey, I appreciate the opportunity. Anytime you want to, you want to invite me to talk nerdy numbers and stuff like that, I am always here. And again, thanks for having me this afternoon.
Absolutely. Thanks, Bill. Have a good one. We'll see you.
All right, take it easy.
Bye.